Good morning everyone. I would like to welcome you all for Q3FY18 Results and Business Outlook Conference Call of Welspun Enterprises Limited. We thank the management for giving us the opportunity to host the call. From the management, we have Mr. Sandeep Garg, Managing Director, Mr. Akhil Jindal, Group CFO and Head Strategy, and Mr. Srinivas Karguntkar, CFO. Without wasting much time, I would now hand over the floor to the management for their opening remarks, and then we can have a Q&A. Over to you, sir.
Thank you. Good morning to everyone. This is Sandeep Garg. Here we have Mr. Akhil Jindal, Mr. Srinivas Karguntkar, Mr. Lalit Jain, Mr. Kevin Daftari, Mr. Harish, and Mr. Subir Sen. It is a pleasure for me to give you the current status of business, a business update. On the infra business side, the current portfolio, we have a hybrid annuity 5 projects of about over 5,000 crores, about 5,100 crores to be precise, and an order book of 4,100 crores of EPC due to these HAM projects. The 5 projects that we are talking about, the first project that we won was Delhi-Meerut Expressway Package 1. I'm happy to inform you that till 31st December 2017, we achieved a progress of about 86%, that is in about 14 months. We have achieved 86% progress on a project which is scheduled by NHAI for 30 months. So we are way ahead of our progress. We expect the project to be dedicated to the nation anytime after 15th of March 2018. We expect the COD to be declared within this month as well. The other project which we have got the appointed date for is the Gagalheri Saranpur Yamunanagar. We got the appointed date for this project on 3rd February 2018, and the execution is in full swing. The third project that we have under hybrid annuity project model is Chutmalpur Ganeshpur and Roorkee Chutmalpur Gagalheri. The appointed date of this project is yet awaited, although the financial closure has been completed. We expect the appointed date to be declared by end of February 2018. The contractor to execute the project is already mobilized on site, and hence as soon as NHAI is in a position to declare the appointed date within February 2018, we would start the work full swing. The fourth project that we have from on infra side under hybrid annuity is Anta Samaria. The concession agreement for this has been signed and the financial closure is in progress. We expect the appointed date to be in the beginning of Q1FY19. The major subcontractor for EPC has already been finalized for it and is under mobilization, so we would start the work as soon as the appointed date is granted. The last project under hybrid annuity model is the Chikali-Tarsod, which we recently acquired. The Chikali-Tarsod, we have acquired 49% from Vishraj Group in January 2018. We are currently trying to close, make the financial closure for same, and we expect the financial closure to take place within this quarter, and the appointed date to start from in the Q1 FY19. The other important information that I would want to share with the investors is about this Devas Water Boot project. We we have been able to sign the concession agreement for the modified project on 9th January 2018. The financial closure is in progress, and the construction is expected to start in Q1 FY19. So this is the update on the infra side of the business. On the oil and gas side of the business, as you may recall, that we are in a joint venture in the oil and gas exploration and production with Adani, with 35% stake of Welspun Enterprises. There are 5 relevant blocks, 2 in Kutch, 1 in Mumbai, and 1 is on hold, and 1 is a discovered small field in the Mumbai High. 2 of the projects, 4 projects out of these 5 are already assigned and are in various stages of development. The Kutch blocks are in the stage of appraisal. The current status is that ONGC has in a nearby block struck gas in a deeper horizon, and since this additional information has come in, we are trying to revisit our strategy on drilling the appraisal well and contemplating going deeper, which will take about additional 9 months to fructify once we have established the revised conditions under which we would want to drill this appraisal well. So that is for the Kutch 2 blocks. The other block which is of interest is discovered small field, which we won in the round 2016. The status is that we are in the field development plan. We are building up the field development plan for the same, and are expected to submit the same by March to DGH for their review. As you may recall, this is under a regime called revenue sharing regime, and hence no approvals are required from DGH, and we can proceed with the project immediately thereafter. We expect this block to go on stream in the FY 1920. It should start producing because it's already a discovered block. The last block, the 4th block that is of interest is the Mumbai block. The Mumbai block, we have, this is an adjoining block to the B9 cluster that we have already won under the discovered small field round. The block is under exploration phase, and we are trying to enter into phase 2. The DGH and MOPNG are in the process of finalizing the process of entering into the phase 2 of the exploration program. We hope that this will be finalized within this quarter. We would want to take up this phase 2 of exploration of the Mumbai block alongside with the B9 block, which will give us a synergistic play because these 2 blocks are absolutely adjoining. The last block of interest in infrastructure on the oil and gas side is the Palej block. It is an oil discovery on land. However, it is under a dispute because a termination notice was issued by the Ministry / DGH because of default by the operator Neftogas. We have gone back to the authorities saying that under the provisions of the PSC, we are entitled to take over this PI. We are quite hopeful that within this quarter this matter will be resolved, and this 10% PI which Neftogas was holding will be transferred to the existing existing PI holders, that is Adani and Welspun, and we should be in a position to go ahead and do the next program on that block as well. I would also want to share with you the outlook as we see on the infra side of the business as well as oil and gas side of the business, the current situation is that NHAI is expecting, it has already come out with about 95% of hybrid annuity model projects, which should be decided in next 3 to 6 months. The value of all these projects put together is approximately 1 lakh crores. As we have been maintaining, we would continue to bid selectively for these projects, and we will participate in the Bharatmala program of NHAI. Currently, we have bid out 5 projects, totaling to about 4,800 crores, for which the bids are yet to be opened. We will continue to demonstrate our philosophy of selective bidding, operational excellence, and respect for capital. These will be the hallmarks of our bidding and execution going forward in the infra space. As far as oil and gas is concerned, as most of you may have noticed, that the oil and gas industry is resurgent. The pricing of the petroleum products is on the upside, so the viability of the blocks have improved as the things evolve. If the appraisal programs prove that these are commercially viable blocks, then the possibility of the same is very high, and the value creation should be better. With this, I would want to hand over the phone to Mr. Akhil Jindal to take you through the financials of the company. Thank you.
Good morning, everyone. Before I start on the financial numbers of this quarter, I just want to make one small suggestion. We are restricting our commentary today on the standalone numbers, and this is primarily because in the console numbers, we see there are a lot of index-related accounting which comes up, which are not a true reflection of the business, and that's why we are urging you to look at the standalone numbers. And if required, you can value the SPV separately as and when they reach to a certain size. So in that sense, the standalone numbers are a true reflection of the business, and I'm restricting our commentary on the standalone numbers today. So the total income in this quarter was around 298 crores. This is more than 4 times of what we did in the corresponding quarter last year, and this has been largely due to the Delhi Meerut project that is undergoing, and Sandeep mentioned that this is at a fag end of completion. So this is the major contributor on the top line in this quarter. Similarly, the corresponding EBITDA of this quarter had also gone up by almost 355% to 46 crores on the reported number. I will give you a breakup on this EBITDA in a little while, but from a reported number perspective, we reported 10.2 crores in the previous year same quarter, which has gone up to 46.2 crores. Overall, on the infra segment, which is our major driver, which is I would say 95% of the business, the overall revenue was 299 crores, and our EBIT in that infra business was 34.9 crores, which is also reported in one of the segmental reporting that you might have seen. So the margin stands on the EPC side, on the EBIT side, was 11.7%. If I look at the EBITDA for the EPC business for the corresponding quarter, the same on the EBITDA side, our EPC margin stands at 13.4%, and for the 9 months, it is 14.3% on a total of 93.7 crores as a EBITDA income for the 9 months. So basically, we are seeing a upsurge in the business. We are seeing the projects that we have taken up now getting reflected in the top line and the bottom line. And as we go along, the growth capital that we have in the company, which is almost 916 crores of cash that is available with us today, is something that we are going to use for building up the new projects that Sandeep just mentioned, and of course bidding for the further new projects. The business seems to be on a stable zone now, with all the new projects coming up, and we are winning these projects on our decent margins. We have always guided the investor community in terms of our margin expectations and our bidding criteria. So this is something that is sacrosanct, and we are very much in the realm of those internal guidelines. And I can assure you that these EBITDA numbers that we have seen on the EPC side at 13.4 and 14.3 for the entire year is something that will remain our benchmark. This, of course, I have to also tell you, this is without the corporate expenses. These are the project level EPC margins, which is what should maintain. And as we get more and more projects, the corporate overheads will be distributed into many projects. So on the reported numbers also, you will see the improvement. With this, I pass on the floor for the question answers. Any question that you have on the balance sheet or other things, we can let you know. But all our key indices are absolutely very, very comfortable. Our net worth is almost 1,400 crores, 1425. Our cash position is 916 crores. So this lot, it's all comfortable. And with this, I pass on the floor for the question here.
Thank you very much, sir. Ladies and gentlemen, we will now begin with the question and answer session. Anyone who wishes to ask a question may please press star, then 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star, then 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star, then 1. We take the first question from the line of Nirav Shah from GC Investments. Please go ahead.
Yeah, good morning, sir, and congratulations on very strong execution during the quarter. Hello?
Yes, thank you.
Thank you, Nirav.
Thank you.
So a few questions. Firstly, sir, what's the land acquisition status on the Ganeshpur project, for which appointed date we are expecting by this month end?
The approximately 50% of the land has already been handed over. Another about 26% of the land, the formal approval has been obtained by the government for the forest, the forest section. The tree counting has been done. The amounts are being deposited by the government, and we expect once these amounts are deposited, these lands will be handed over to us. And we will be at somewhere around 78% with this handing over of the land. And we expect the 2% also to come through by the encumbered lands by the month end, so that we expect the appointed date to take by end of February.
So for the 26% you were saying it's just the formal approval that has been...
The formal approval has already been obtained. The government has already given the offer. It's now under procedural side of the business.
So for the possession part, it has been acquired but not under possession.
Yeah, it is not under possession. So there are certain payments which need to be made, so which is under process right now.
Absolutely. And sir, on the Chikali-Tarsod project, what's the land acquisition status?
As for the, and I would want to put a caveat here that we have not verified because we have not taken a position. Okay. Appointed date has not taken place. However, as per NHAI, they are now having more than 80% land.
More than 80%?
Yeah.
Okay. So even getting appointed date, doing FC and appointed date should not be a very big issue like...
Definitely. We don't foresee any problem because two projects adjoining to it on both sides are already have achieved the appointed date and have more than 80% of the land. So we do not foresee any problem on that project.
Okay. Sir, and on oil and gas, what was the investment done in FY18 and what are we likely to do in 19?
18, as far as the Welspun is concerned, we have invested about 5 crores till now. Most of it which has gone into B9, which we are doing a field development and some overheads of the company. And the appraisal programs of the Kutch block. So these are the two major heads of expenses where we are incurring costs. The next year we expect at least about 100 crores to go into the business. I'm not 100% sure of these numbers for the next year at this point in time, but my estimate is about 100%. Approximately.
Okay. And sir, can you just give the breakup of other income between financial income and non-financial income?
Yeah, so let me take this question.
And sir, just one request also on this. If we can give this number separately in our future press releases, that would be very convenient, sir. Yeah.
We will do that, certainly. So in the Q3, the treasury income, which is something that other income we count, is 19.51. And for the 9 months, it was 58.5. So this is the treasury income, which is on account of the surplus cash that we have. Rest of all, you can presume is the index adjustment or the provisional write back of the previous provisions. So other than that, everything else you can count as a operational income.
Perfect. And sir, just the final question from my side. What's the progress on Delhi Merit as on date, wherever,
About 93%?
93%. Perfect, sir. Thanks a lot, sir, for answering my questions and all the best.
Thank you. Appreciate it.
Thank you. We take the next question from the line of Viral Shah from MK Global. Please go ahead.
Good morning, sir. Congratulations on a good set of numbers, sir. Just to start with, can I have the breakup of execution for the project-wise for the quarter? I just missed that number.
We have not shared that number earlier. So basically, you can say that most of the contribution has come from Delhi Merit.
Okay.
But for a very small contribution from other projects.
Okay.
We will strive to give the breakup in the future quarters.
Okay.
Where different projects will contribute significantly.
Okay. And going forward, so what is the status on this 2 bags project on NBL, from NBL basically?
As I said, we have already achieved the appointed date for one of them in 3rd of February.
Okay.
The second, we expect the appointed date to be given within the February month.
Within the February month. Okay. And which are those projects, sir?
One is Gagalheri, Saranpur, Yamunanagar. The other one is Chutmalpur, Gagalheri.
Yeah.
Gagalheri, Ganeshpur.
Gagalheri, Ganeshpur, and Gagalheri, Sahanpur, right?
Chutmalpur, Gagalheri, Ganeshpur.
Okay, fine, sir. And what is the status on the remaining projects for achieving the financial closure?
Sorry?
What is the status for the remaining projects to achieve financial closure, or they have already achieved and execution has started?
They are in various stages of achieving the financial closures. We expect both of them, which we are under financial closure, to achieve the financial closure within this quarter.
Okay. So basically, Q1 FY19 is where you expect all the projects to start execution.
So 3 projects will be going on in the Q4 of this year, and then one will taper off in Q1, which is Delhi Merit.
Okay.
And 2 will come in.
2 will come in. Okay. Fine, sir. Thank you so much, and all the best.
Thank you.
Thank you. We take the next question from the line of ASN Raju, an individual investor. Please go ahead.
Sir, good morning, everyone. Sir, my simple question is, we are having 960 crores cash. What is the net income on that cash per year, and what is the business income per year?
Yeah, so the cash income is, the treasury income is between 8.5% to 9% is what we are earning. And business income, EBITDA income, we have just said on the EPC side is around, you can say between 12 and 14%.
Okay, altogether this year we will be getting 200 crores of profit, sir. 8% means 80 crores roughly. The other is 14% means 190 crores around. Together 170 will be the profit for years.
Yeah, it should be close. The numbers will be close. We do not give the guidance on the numbers specifically, but you are close to the numbers that we are targeting.
Okay. So my second question is, how much MBL made?
I'm sorry, when you say profit, you mean EBITDA, right? I mean, we...
Yeah, EBITDA, sir.
Yeah, okay, sure.
Of not PAT, sir.
No, that's why I just wanted to clarify here.
Yes, sir. The other question is, what MBL made by selling those 2 businesses to us? And the same with the new project which we brought by Viraj Group. what they made and what is the percentage of the project, what we paid for him to buy that?
The project terms, they are somewhere around cost of acquisition is about 2%.
2%.
Less than 2%.
Is it 2%?
Less than 2%.
Less than 2%. If you bid in the next project, that 2% we will directly get the project first.
That is not true, and that's also true to a certain extent. There are bidding costs involved, which are already to the tune of 1.5%. And since these are already, if you do the risk-denominated return on the investment, probably this makes a lot of economic sense to get it.
But my understanding from last some bids is that only 8 or 9 players are there in the hybrid annuity projects, sir.
Yeah,
as you mentioned in your annual results report, that 1 trillion works are coming, 1 trillion value works are coming.
Yeah.
Many of them won't get financial closure other than 4 or 5 guys, sir. So Welspun has a huge opportunity to bid at a higher rate and earn a lot on them, sir.
Raju, as we said, we maintain our internal yardstick for profits. We are not getting governed by what others are doing. We will continue to follow our guidelines, and if we see that there is an opportunity to improve and create more value for stakeholders, we will definitely try. But currently, our yardsticks are frozen for this year, and we will continue to bid on those yardsticks.
Sir, my submission is that only 8 players are there who get financial closure for those new bids. Among that 8, maybe 2 or 3, more than 2 or 3, they can't get financial closure, sir. So, 95 projects are there, remaining 40, 50 projects. They won't, no one in this current scenario, construction companies won't get financial closure for those 40, 50 projects.
So we take your comment. We are monitoring the industry. We will interact with the opportunities the way we should.
We are cognizant of the fact, and we are working to get projects in our own terms, where the margins are protected, not just for the top line. So,
am I wrong, sir? In my view, what the industry is happening?
I can't comment, Mr. Raju, on other companies' abilities, so we will refrain.
No, sir, that will be an opportunity to Welspun.
We are cognizant of the opportunity, and we will seize the opportunity in the best manner possible. However, we will refrain from commenting on any other company's abilities or the industry's ability to respond to this opportunity.
With the current order book, what is our 2019 March annual turnover can be, sir?
See, we currently have an order book of about 4,000 crores. We possibly will add a few thousand crores more. So, during the first year, as you know, the appointed date takes place after the award in about 6 months' time. So we expect the current order backlog to contribute the maximum revenue in the next year. And thereafter, some new projects will contribute for 1 or 2 quarters, depending upon when they get awarded. So,
okay, sir. My last question is, what will be the revenue or any dilution of stakes in oil business, sir?
Sorry, I couldn't get your question.
Revenue or exit?
Revenue or exiting oil business, and what we make profit in oil business, sir?
The current M&As that have taken place in oil and gas are at something like about 6.6 times the EV has been about 6.6 times the EBITDA. So that's what normally is the yardstick. So we will know once the appraisal program is complete as to what value this is at.
Expectations, sir?
It will be premature, Mr. Raju. We need to wait for the appraisal program to be completed.
Okay, sir. Thank you a lot.
Thank you.
Thank you. We take the next question from the line of Dhruv Agarwal from Cressida Investments. Please go ahead.
Good morning, sir. Congratulations on a good set of numbers. Sir, I just started following the company some time back, so please pardon me if I have some repeat questions. Sir, in the previous questions, what I heard is that your treasury income amounts to around 90 crores with the EPC side doing EBITDA margins of 12 to 14% margin range. Is that correct?
Yeah, 90 crores in the range for the entire year and 19.51 for this quarter.
19.51 is the treasury income for this quarter.
For this quarter, and the 90 crores figure that you mentioned was Mr. Raju response to our treasury total.
Okay, for the whole year, as for the year as a whole.
Yeah, 9 months we have done 58.5, so you can extrapolate.
Okay. So that would amount to around 170 crores of EBITDA for this year.
Yeah, we will be close to that number.
So that would be consolidated EBITDA for this year, correct?
Yeah, this would be slightly better in our own appreciation because our operations are going to be larger in volume. But
okay. Okay, so what should be your top line for this year, sir? An estimate of your consolidated top line?
Around 1,100 to 1,200 crores.
1,100 to 1,200 crores. And how do you see that growing for the next 2 to 3 years? What is the CAGR that we can assume?
Next year is going to be quite a substantial increase. At least we expect it to almost double up.
Okay, double.
Then the balance we will be able to give you in guidance as we win the project.
Okay. And so one thing you said is that the majority of your top line is coming from the Delhi-Meerut Expressway project, which you have right now in your hand. And once that gets complete, how do you see the other projects contributing to your top line?
As I said, one project has already started throwing out the revenue. The second project should start throwing in the revenue by the month end.
Okay.
And in substantial manner, since we are fully mobilized, we will be able to do the progress very quickly. Originally, the whole project is available. 80% of the land is available for us to work. And
okay.
Here to start the work in every location. Fortunately for us, most of these projects have a greenfield portion which is free of any other issues relating to diversions of traffic, etc., etc. So we expect the progress to be very fast going forward.
Right. Okay, and the last question is, sir, your infra business order book right now is 4,100 crores. Is that correct?
4,100 crores is our current order book.
Current order book. And you before that you said you have 5 HAM projects of 5,000 crores book. I did not get what that 5,000 crores is.
Total project that you have won.
The total project that you have won?
Yeah.
And 4,100 crores is the unexecuted part, if I'm correct?
That's correct.
Okay. Thank you so much, sir. Thank you.
Thank you. We take the next question from the line of G. Vivek from GS Investments. Please go ahead.
Sir, congratulations on an excellent set of numbers. My question is regarding the opportunity size. We have been hearing that opportunity size for the road construction sector is fantastic. But as we go through the order book, other than the Meerut Expressway, we have, and the Ata Simaria also, I think so. Other than we are sort of increasing our order book by buying from assets from the distressed players. So our profitability and the other criteria are met in this regard also. And with March coming to the close, what are the chances of new contracts being backed by us? Because ours is one of the few companies which is cash rich and financially very strong.
Two parts of this question, and I would want to answer. So first is that it is true that we have won directly from NHAI 2 contracts, which is one is Delhi-Meerut and the second is Ata Simaria. Secondly, we have acquired 3 projects from the market on the stress test, and the criteria for acquisition is exactly the same until and unless we meet our threshold numbers. We don't look at it. We get opportunities of acquisitions almost every month too. So that's not something which excites us. Any project which cannot throw up the numbers that we have benchmarked ourselves against, we don't look at it then. Secondly, the upcoming projects, we expect us to be successful. There is enough quantum of work. There are limited number of players in the fray. We are going to continue to bid on our target returns and hope to get at least 2 to 3 projects between now and the current bids that are going in. We expect at least 3 projects to be won by us.
Okay, sir. And so we have made substantial investment in the oil and gas business, sir. Any plans of demerging that business, and when can we expect some contribution to the top and bottom line from those projects, sir?
See, as we said, 1920 is our target to start producing from the discovered small field block P9, and then we expect every year one block to come online. The returns we should see the returns coming in the FY 1920. And as you know, the oil and gas, it is mostly the initial capital deployment, which is during the exploration phase and developmental phase, which is most heavy. Beyond that, the EBITDA contributions are substantial because cost of extraction is relatively very low. So since 4 of our blocks are already hydrocarbon bearing, we expect the contributions to be sufficient going forward from 1920.
Any plans of demerging the soil business, sir?
Not at this point in time.
So I stay close by to your Meerut Expressway, and I would like to congratulate you for the fantastic progress you have made in the phase 1. And I believe phase 2 and phase 3 are a pathetic stage, and the contrast between the project completed by us, our company, and I think the Chetak and other companies is really contrasting. And great work you have done. Congratulations, sir. And just wanted to know, you have a policy of not owning the equipment and trying to outsource it to third-party contractors. So how effective are they, and does it lead to loss in our profitability, lower margins, if we don't own it and our own equipment?
Two things that I would leave for the investor community to think through. Number one, the EPC business needs about 20% of the project value as the construction equipment investments, and the construction equipment gets depreciated over 3 to 4 years over 3 to 4 projects. So in case of EPC business, it would be, if we were to start doing it, it would be a cash guzzling business to begin with. Number two, as we look at it, because we do it, we use the best player in that area for doing the projects. They bring in an efficiency of about 3% in their operations itself. The other thing is that since we are a small, nimble-feeted company, our overheads will remain small, so we expect the overheads to be lower by about 2 to 3%. Normally, an EPC contractor makes about 7 to 8% profit margin, so 6% is contributed like this. I may have an additional cost of 1.5%, 2%, I don't know. However, I take it as a cost of insurance, because when the risks of EPC are transferred to the company which is best equipped to deal with it, I not only get a contractual rights to and safety net, I also can get insurable risks which ensure that in case something were to go wrong, the company itself will not be subjected to uncalculated risk. Secondly, that I would want to leave a thought in the investor's mind is that once you are invested into the equipment asset heavily and it's a growing business, it is perfectly fine. However, if there, for some reason, there is a break in the infra development for any reason, for a short duration, the value erosion is very steep. And hence, as a company, we have taken a view which is consistent with the international practices that the developers need to be staying away from executing EPC, and EPC players need to be EPC players rather than coming into the domain of developers. So that's what our views are, and we will evolve. We believe that we will evolve as the world has evolved, and hence we are following a policy which is mostly followed in the developed world.
Ghawa Construction is our subcontractor for the Meerut Expressway. Are they the same contractor for Gagalhedi and other projects also?
Yeah, he is the same contractor. So we are developing a relationship like a supply chain. So we will have supply chain of our own.
Yeah, very good performance, sir. Keep up the good work. And just wanted to last have idea about the opportunity size for our sector and how long Is it expected to continue, and does our financial strength give us a big edge over the competition?
See, we generally believe that the financial strength is a strength. However, our views are that the sustainable differentiation is more by operational excellence and risk and respect for capital. So these are more sustainable than just having some cash, because there have been many companies which may have cash. So our exercise will be to develop a USP in terms of operational excellence and respect for capital.
But our financial strength is giving us an opportunity to pick and choose the projects which meet our profitability criteria from the distressed assets. That is for sure.
That is for sure, yes. So there are distressed assets which come across to us to help them out very frequently. That's true.
Opportunity size remains huge in terms of both original tendering as well as the secondary purchase of the orders.
That is true, sir.
Keep up the good work, sir. Thank you.
Thank you.
Thank you. We take the next question from the line of Abhilasha Satale from Dalal & Broacha. Please go ahead.
Yeah, thank you. Congratulations for good set of numbers, sir. Sir, I want to understand how will be, financing of the projects. Like, how will be our cash and debt move over a period as these other three projects progresses over FY19?
Yes, so basically, the financing is done in a traditional manner with a debt equity of around 80-20. So for a project which is, let's say, 1,000 crore, 40%, which is 400 crores, come from the NHAI over a period of time. We might have to partly finance it for the short-term interim period, but eventually 40% come from NHAI. The 60% get financed from the, 60% is what we need to totally finance, out of which 48 come from the banks, and 12% is our own equity. So we have a healthy balance of our EPC margin and our equity, going together. And in that sense, out of 1,000 crore that we have, this money should be sufficient, more than sufficient for us to execute all these projects that we are currently doing, and also the projects that will come along over the next let's say, 12 to 18 months. It all depends upon the speed of execution, but I can tell you the funds will never be a constraint for us to get the best of the projects and to build up the best-in-class roads, highways that we are currently aiming on.
Okay. So, sir, prima facie it appears that our debt should be in the range of 1,200 to 1,500 crores, 1,200 to 1,400 crores by the end of FY19. Is that...
No, so we do not take debt at the holding company level, which is Welspun Enterprise. All these debts are taken at the SPV level, and they are mostly non-recourse. We do not give any kind of a bank guarantee or a corporate guarantee for borrowings of these loans. So in that sense, that SPV debts will continue. But however, we have a clear aim that once these projects get complete, we would have a natural exit from these projects in a time zone, which will allow us not to even have debt at all, even in the SPV levels. So to that extent, the borrowing at the Welspun Enterprise level would be very, very limited. I would say almost nothing required at this juncture. And the funds are sufficient. And SPV will continue to borrow on the debt equity that I just mentioned to you, 48% coming from the banks and 12% as our own equity.
Okay. So at consolidated level, it will be seen.
See, the infra companies are never looked at a console level because obviously these are non-recourse basis, and they clearly start getting paid. See, this is the beauty of this model, NHAI HEM model, is that we, after the project gets complete, which is let's say in 2 to 3 years, we practically become like a collection agent. So we receive money from NHAI and we pay to the banks. So that would be the SPV role. And every loan that is taken, in a way directly, indirectly gets guaranteed by NHAI. So you can presume that they are as good as directly lending to NHAI. So in that sense, there is no recourse requirement. And as a parent, we are not exposed in that sense. During construction, of course, we take a lot of precautions, a lot of insurance and other things, which Sandeep just mentioned in his initial commentary. And that is what will support us. So consolidating debt for the infra companies where these are standalone basis is perhaps not being done in the industry. And the parent level debt is all that counts, which at this juncture is hardly anything. I mean, around 50-60 crores is the total debt that's there at the parent level.
Okay, fine, sir. Sir, can I know how much is operating cash flow for 9 months?
Can we give this answer to you offline?
Yeah.
Yeah, we'll give it to you.
Thank you.
Thank you. We take the next question from the line of Prem Khurana from Anand Rathi. Please go ahead.
Yeah, good morning, sir. Thanks for taking my question. Sir, most of my questions have already been answered, just a couple. So one was basically, I mean, you will be the first one to kind of finish any hybrid annuity project in India, and which essentially means you would have had the best experience, or rather the first-hand experience with NHAI in terms of getting your payments and dealing with them. So how has the experience been? I mean, whether we were able to get our payments in time, especially on the grant that we were supposed to receive from them?
We have received all grants on time. So there has been no delay by NHAI. NHAI has been very cooperative on all issues in terms of payment.
Okay.
So we are happy with our experience.
Sure. But then would it be because, I mean, there were limited projects under construction, because, I mean, they gave out a number of projects, but then most of these projects took some time to kind of able to get financial closure, which is where, I mean, most of these projects were not moving only, so which is where, I mean, NHAI was supposed to build some kind of confidence in the system so that people come and bid for these projects, or bankers come and kind of fund these projects. Or do you get to see that the NHAI would continue with the kind of practice that you've experienced with them?
I believe this change is permanent, that they would want to support the infrastructure build-up, and they recognize the quicker they fund the concessionaires or contractors, the quicker the infrastructure gets built up. So I don't think this is a one-off case. I believe that this is clearly a focus from top to bottom to get the infrastructure built up.
Sure. And the second question would be, I mean, given the fact that we are on the verge of completing this Delhi Mayor, so the idea would be to hold on to this asset, or the idea would be to kind of monetize it? Because, I mean, why I ask this question is basically because you get to create the maximum value for your shareholders once you want to execute the project. The construction risk is taken care of. After that, it essentially becomes, I mean, especially in case of hybrid annuity, it essentially becomes a spread play, right? So basically what you're getting from the NHAI and what the cost of funding is for you. So the idea would be to hold on to the asset, or try and monetize and get your money back and then redeploy that money back into the business and look at some more opportunities wherein you would be able to create more value for your shareholders.
See, we will, subject to the NHAI approval,
okay,
we would be wanting to rechurn the equity that we have invested.
Okay.
There could be various models to do that. We would find the best model which will create the maximum value for us.
Sure. And just one last from my end. So basically, I was looking at the bid pipeline that exists in the system, and it essentially seems that most of you guys would be able to kind of get more than enough work to be able to take care of your growth opportunity. So which is where, so I was wondering, I mean, whether there could be a situation with the availability of quality contractors, because, I mean, essentially for us, it's all the more important because we're relying on outsourcing models, wherein, I mean, for us, it becomes very essential to kind of find quality contractors to get our work done, given the fact that, I mean, we're talking about 95 projects to be awarded over the next 3 to 6 odd months, and which is where, I mean, most of these guys would be able to get more than enough to take care of. So could there be a situation wherein we start facing issues in terms of finding quality contractors, or the costs go up for us because these guys would be much more in demand then? And could that lead us to kind of start building our own in-house execution capabilities, or in-house execution is strictly no-no for us?
No. So in a business, there are no strict no's, but to answer your question, we evolve as the situation evolves.
Okay.
However, to answer your question, would there be a scarcity of the contractors in India for EPC? My appreciation is very simple, that the EPC contractors will be enough in the country.
Okay.
For simple reason that whilst infrastructure built up in terms of road, etc., is picking up, there are not many sectors where the construction companies are struggling to make their both ends meet. So a lot of contractors will move from being just a contractor of buildings, etc., to infrastructure, builders. And as you say, when the opportunity is there, the businessmen will look at the opportunity and create value. Another thing that I may want you to consider, even at this point in time, if you look at the EPC bids of NHAI, they are mostly under the estimates, while most of the bids on the hybrid annuity are not. So there is a definitive still a struggle in terms of EPC contractors getting the business in, and they're competing very extensively with each other. So hence, I do not see that the saturation level for EPC contractors will come in the next couple of years. As the volumes will grow, there will be a lot of contractors who are, in the neighboring countries who are sitting with a lot of assets and have no work to come and fill in the gap.
Sure. Okay. And just one last, if I may. So this Devas water project, we rebid for this project. So did we have an option to kind of give it back? Because, so basically, I mean, the idea was to understand whether you want to make it big in roads or you're open to kind of consider other segments as well.
We are always open to other segments. We continue to evaluate them.
Okay.
And one of the areas that we continue to evaluate is water, and that is why we entered into it. We are just looking at an opportune time to make it big.
Sure. Thank you. That is my.
Thank you.
Thank you. We take the next question from the line of Divyata Dalal from Systematic Shares. Please go ahead.
Yeah, good morning, sir. Congratulations on a very good set of numbers. Most of my queries have been answered. Just wanted to understand more on the water project. What kind of investment would we be doing for this project in next 1 year, sir?
If the question is Devas Water, we are talking about the project size per se is about 70 crores for the modified project. However, the past project also gets transferred onto the new SPV, so the total project cost is about 130 crores.
Okay, and this would be spread over how many years, sir?
1 year.
Okay, and what kind of revenue stream can we expect from this project?
It's about 23 MLD scheme, and the current, if the concession were to be applied, the rate for the water would be about 46 rupees. So that's the number. I don't have the exact number.
No problem, sir. I'll take it later.
So this is what the approximate revenue generation would be.
Right, sir. So coming to the consolidated revenue number which we mentioned some time back of around 1100 to 1200 crores, does this also factor in some part of Ganeshpur and GSY project?
Yes, it does, because they will also start going up revenues.
Okay, and also does it include the early completion bonus on DME?
Not as of now.
Until
unless we get the COD, we would not account for it.
Okay, and lastly, what would be the land acquisition status for Anta Simaria project?
Anta Simaria is a 8-kilometer road project. It is in a remote area, so there are no land acquisition issues per se.
Okay.
Other than minor encumbrances, which we believe that we will want to get them removed post the harvesting season.
Okay, so we can expect the construction to start in 1Q on this project?
Yeah, Q1 of FY.
Q1 of FY19. Yeah. Okay, and lastly, what would be our target order inflow for next year, FY19?
Given the opportunity size, it would be substantially higher than my earlier forecast. We could definitely look at an additional order book in next year of about, between now and the end of March 2019, to be somewhere between 8,000 crores approximately.
Sorry, 8,000 crores?
Yeah.
Okay. All right. Yeah. All the best, sir. Thanks. That's it from my side. Thank you.
Thank you. Ladies and gentlemen, we take the last question from the line of Nirav Shah from GC Investments. Please go ahead.
So just wanted to understand how many bidders were there in the 5 HAM live bids that is ongoing?
So one of the projects that we bidded, there were 9 bidders, which is in the Andhra Pradesh, the Nidigata, Mysore. In the Haryana, we bid 2 projects. In one of the projects, there were 6 bidders. In the other projects, there were 4 bidders, or 7 bidders in one of the projects, and 4 bidders on the second project. And in the 2 projects that we have bidded in Tamil Nadu, we had in one project 4 bidders, including us, and in the other project 3 bidders, including us. So that's the competitive scenario. So depending upon various combination, it could be anything from 3 to 8 bidders.
Okay. And what will be our pipeline that will be submitting? Because we'll be selective in the projects. We cannot do plain vanilla projects.
Yeah. So because the projects are substantial and there is a bunching effect, we probably will bid something around 25,000 crores.
Got it. Great. Thanks a lot, sir.
Thank you.
Thank you, Neeru.
Thank you, everybody, for joining us on this conference call. And with this, we would want to hand it over back to Dalit Capital for...
excuse me, this is the operator. Okay, so that question just has left the queue.
Right. Yeah, thank you, sir, for giving us the opportunity to host the call. And thank you all the participants. Thank you, sir.
Thank you.